Hi, good morning. Welcome to another webinar here. This morning we're going to talk about just putting all the pieces of the puzzle together um, and how to use this strategy and how to just kind of keep track of your trade as you go and just kind of review everything that we've covered so far and just kind of put it together so you can keep it fresh in your mind and leave these courses with enough confidence to trade and know what to look for. Okay, so let's go back to the beginning here and just review. This is what we're looking for. Okay, we're looking for this in any time frame. Like I mentioned before, it doesn't have to have all of the emotions and do 100% retrace. And most likely, since this is this belief point here and this is this belief point here, there was another leg to this that it just doesn't show here because it didn't start at disbelief. So there was another phase that led up to disbelief for this cycle to continue and repeat itself over and over again. So we want to be in tune mostly with the emotions that are leading to loss, basically, because this is a game where mostly like 90% of people are losing. So you have to really understand how those people are losing and how you're losing if you're losing to be able to win. You have to really understand that loss and understand the emotions that are being experienced mostly at the wrong times. Okay, so I want to keep this fresh in your mind, and this is really going to help to identify when your biggest opportunity is coming. Okay, like let's say when we can identify that a complete market cycle has happened and a new one is beginning, that's when we have the most opportunity to identify that something has left behind an old market cycle pattern, has left behind old price discovery zones, and is leading into something new. Okay, and just understanding this cycle right here and being able to identify it will help you to identify those opportunities that are going to give you the most gains. Okay, for instance, like basically almost all the coins, not all the coins, but a lot of the coins that we're playing recently left behind a very large market cycle. So at the early stages of realizing, hey, we're breaking out of depression, we're about to break out and start a little rally of it's going to lead to disbelief. Those are the times to really gain the most, because you could really have a buy and a hold strategy from the very beginning if you can spot a market cycle that has ended and a new one is beginning. And that's a strategy that we could have used on Ethereum, XMR, XEM, Sia coin. I mean, there's a lot of these coins that have left behind old market cycles and are starting fresh new market cycles. But like we discussed the other day, if you go with the whole buy and the hold strategy, and you get in this spot anticipating another market cycle to come, you're going to have a lot of up and down days. You're going to have days where the price will go up 200% and then come back down where you're only 60% up. And then so you'll have to be able to ride through these these ebbs and flows that the market does, these ups and downs. But recognizing the way that market cycles work, if you get in a good position here, you could ride it through all the highs and the lows and the highs and the lows, but understand that it's going to continue trending up. Okay, now if you don't get into the market here in this area here and you see something like a disbelief rally happen or a breakout happen, then you have to really choose your entry wisely, because if you get in a certain area here while the rally is going on and you don't take profit, the price may very well drop down below where you got in and leave you at a loss, or questioning whether you should hold your trade. So really identifying where you're at in the market cycle is very important, because if you can spot a market that is leaving an old market cycle behind and place yourself for a larger move, then you can buy and hold. You can literally buy and hold and wait and ride it out through all these ebbs and flows. Now, I wouldn't recommend that for you guys that like to day trade in and out on a daily level, and kind of extract profits every few days or every week, because if you go with the buy and hold strategy, you almost have to not look at your account for at least a week or so. And because like I said, there's gonna be times that you'll be up 200%, and then you'll only be up 60%, and you'll only be up another 100%, and then you'll only be up 75%. So you have to, if you're going to do the buy and hold strategy, you have to realize that there are going to be times that you're going to look at your account and it's going to be up, and you're going to look at your account and it's going to be down, because this continual cycle of ebb and flow, up and down, continues. Okay, that's why we see the waves within the waves. Okay, so you have to be prepared for that. Okay, if you're going to do the whole beginning buy and hold strategy, it will work out for you in the long run, but you have to be prepared for, looking at your account and it's up and then it's down and then it's up and it's down again, and waiting until it pushes a little bit further in the trend, and then you can say, okay, it's stabilized where I'm up 200%, now I'm up 300, 225, and so on. And realize that the market is going to make, those ebbs and the flows the whole time that you position yourself early. Just be aware that it will, be up and down. So like I discussed with you guys early on, is that I saw that happening when I was trading in Forex, and a lot of the time, I would get in, let's say a move like this at this point, and if I didn't take the profit, this next wave here sometimes comes all the way back down to this top one. And before I understood Elliott wave theory, I would just be watching a lot of profit come and go, without taking it. And it started to bother me, because I'd say, well, hey, I'm planting myself for these really big moves, and the market is moving in the direction I think, and then if I don't take profit, the market comes back around, stops me out. I maybe even lose money on a trade that I should have been making money on, or that I had plenty of time to make money on, and I didn't take the profit. So really be aware of that. That's why I have come to the conclusion for myself. You guys will find your own personal flow with using this strategy. But for myself, when I see profit there, at least 40 to 50%, I take it. I take it and I look for re-entry. I stack up my profits, my Bitcoins, and I look to re-enter. And I maybe even will re-enter the trade at another point with profits, so I can get a bigger position and ride that next wave of whatever, 40, 50, 80%. Ride that next wave with more to put into it. Okay, and kind of just stack up profits into the next trade. So just understanding where you're at in the market cycle, really, guys, is going to really lay out your opportunities. And understanding how the market's going to unfold and the geometry of the market is really going to lay out your opportunities for you. Okay, so we always want to keep that in mind. Keep in mind the emotional cycle that's going on. Once things get to a certain point and they start really going up, you don't want to keep buying them unless you feel like there's another buyer that's going to come in after you. Okay, like there gets a point in the time in the market where the buying energy gets exhausted, and you have to be aware of that, especially when it drops back down and then comes back up like this, and you see this type of a pattern in the market. And you reach complacency. Complacency is a really good place to get out if you miss the top, okay? Because complacency will usually rally back up almost where you can get, you can't get that full profit that you got. Sometimes complacency comes up pretty high, but that's a good place to get out if you miss the top and you see, okay, this thing had a nice sell down, we're rallying back up, seems like the market's getting complacent, let me take my profits, okay? So we never really can tell where a bull run is going to stop. That's why I really don't short bull markets, because we can lay out our Fibonacci extensions and say, okay, this is heading into our Fibonacci extension zone, but a lot of the time, the fear of missing out and the greed of the traders will push it a little bit higher even. And so if you don't know where to get out on that first run, and you didn't take your profit, then wait. You don't have to sell into this fear. There's always going to be that little bounce that'll come back up where the market kind of gets complacent and kind of consolidates. That would be your time. That would be your time. If you missed your top, get out in complacency. Okay? And then basically just tracking that, guys, through through the Elliott wave theory. Okay? Tracking it and realizing that when you get into a move, first, especially in a first impulsive move, and this could be on the way down too. Okay, this could be selling on the way down also. Same rules. Okay, that these waves shouldn't overlap each other. Okay, this first one after the impulses, just let it do what it's going to do. A lot of traders lose money on that first impulsive wave because they say, oh, it broke out from accumulation, or hey, this thing's moving up. There's a lot of energy going into this. And a lot of traders lose money on that first wave because that first wave comes and then eventually it runs out of energy. And if you don't know where it's going to run out of energy, I mean, this whole little 1 and a 2 move is a complete emotional cycle in itself. Okay? It's just not going through all of the emotions. It holds a retracement and then continues on according to, the Elliott wave theory. It will go a certain impulsive amount and then the buyers will run out of energy and then it's going to fall to a respective retracement point. Now, if you understand that, then you can just let the market do what it's going to do. You can let everyone else lose their money and observe the market and then look for a place to get into the market. Okay? And so a lot of traders will lose their money or make a bad trade on that first impulsive move because they'll say, hey, this broke out. This could go to, 10 times in price. So they'll all start jumping in here, not realizing, well, during this, time frame, whether this is a 15-minute chart or an hourly or a 6-hour, whatever the time frame is, you have to be aware of that. At some point, it's going to get overbought, and there's going to have to be some sort of an oscillation in market strength. So you don't want to go chasing the market up on an impulsive move because you have to realize it's going to run out of strength. There's a bigger picture unfolding, but the market doesn't just go to the moon, okay? And a lot of people think that, if something breaks out, that it's just going to go to the moon and they're going to get rich. And they buy at the wrong time, okay? Meaning that, something breaks out and they're like, hey, this thing could go 10 times in price. Everybody's talking about it on Twitter, or the thread looks good, or whatever hype factor may be. Yeah, there's probably a lot of truth to that this coin could go 10 times in price, but you don't want to chase it up while it's running, okay? Like, that's my biggest thing too, guys, is that if I establish a trend and I say, hey, this coin broke out, this market is going up. It doesn't even have to be a coin. It could be a stock. It could be a foreign exchange currency pair. It could be silver, gold. It could be corn, rice. It doesn't really matter. All these charts will print the same. So, but when you see it breaking out and going up, don't chase it. If you've established that the trend is moving up, do not buy it when it's green. Literally, wait for it to sell off and buy everyone else's loss, buy everyone else's panic, and buy everyone else's fear. Because you understand that there's a bigger picture unfolding and you want to place yourself for the anticipated next move. And that's the biggest way that this strategy works, is that this strategy it's a combination of a couple things that I found work over the years. Okay, market psychology is definitely going on. The only thing consistent in any market is the emotions of the traders, and is the collective loss that everyone is experiencing. Because I don't know when the last time they did a survey, but I mean, about 5-7 years ago when I was trading forex, or just kind of getting into trading forex and getting my feet wet, the statistics were there. Like 90% of people lose. It's really hard to win in this game. So you have to really understand how everyone's losing to be able to win. And so that's why Elliott wave theory just kind of really clicked for me, because it, I haven't seen anybody else connect the two, honestly, but like the emotional cycle to me is the Elliott wave theory. Okay, meaning that as soon as the market sparks an impulsive move, let all the emotions of the traders pile in, and it leaves a print on the chart, and that print is literally measurable with the Fibonacci tool to show you the potential growth of that impulsive move, where this market could grow to. And so from that first impulsive move that the traders make, those first emotions that are experienced and left on the chart, it's measurable. And it plots it out from that point on where it could grow to according to the Fibonacci laws of the universe of harmonics. So when we realize that, there's, it provides an opportunity for us to say, okay, well, this is pretty well destined to lead to a certain place. And the Elliott wave is going to be the roadmap that's going to get it there. And sometimes the Elliott wave is, very beautiful and measurable like this, like kind of like an XMR, where it's almost every single wave within wave can be spotted. And sometimes the Elliott waves are, ugly and they're messy, and it's hard to pick out the structure in them. But usually you'll find a time frame that you can kind of tune into and say, okay, it's heading in this direction, or it's measurable from this point of where we could go. Okay? So when you understand that as soon as the market impulses, that it's leaving a print on the chart that can be measured. You're literally measuring human emotion. Okay? Like, you can call it, we're measuring, the highs to the lows, the candlestick wicks to the wicks. But in reality, all we're really doing is measuring human emotion. The human emotion that was left on the chart and where that could possibly lead us. Okay? And then realizing where we should get in from that move. Realizing where we should get in. And understanding that most people are going to lose their money on this first move. They're going to say, hey, this thing broke out. This thing looks great. The earnings reports for the currency are great. Or, there's a lot of fundamental hype that's going to bring this coin and make it go 10 times in price. But they'll all pile in. They'll jump in. And they won't realize that first impulsive move is going to run out of strength. And it's going to have to do a retracement. It's going to have to breathe. So most of the time, what happens is if you buy anywhere in this leg up, and then the price starts to turn around on you, fear kicks in. Okay, I'm sure you've all experienced it where you guys buy the market a little bit late, and then you're like, oh shit, whoa man, the price is going down now. What should I do? What should I do? Should I hold my position? Should I sell the loss? And then, that all of those emotions start to kick in. It happens to all of us. As soon as you buy and the price goes lower than where you bought, you are instantly in an emotion of doubt and fear, uncertainty, and doubt. In your own trading, mentality that you're trying to, have good discipline with. It kicks in and it will take over, and you'll start to sit there and question your trade. Okay, maybe if it just comes back around. That's where a lot of traders will start to exercise patience at the wrong time. Instead of waiting to get into a trade and waiting for the right entry, a lot of traders will buy at the wrong time and then wait for the market to come back around so it suits their trade, which is totally wrong. I mean, the market, like, if you get into a wrong position and you start telling yourself, okay, well, I'm just going to wait for this, I'm going to patiently wait for the market to come back around so that so that I'm in the positive, you're fooling yourself. Unless you really know the structure of the market and that you have a really good chance that the market's going to come back around to your entry. A lot of traders don't know that. A lot of traders that's the thing, like, if you know that the market's going to come back around to your entry, then you probably understand the market structure and you probably understand how you bought in the wrong place. But this is a market, especially in cryptocurrency, where a lot of people have no idea what they are doing. The barrier to entry for cryptocurrency is very, very minimal. Anybody can get a little bit of Bitcoin. Anybody can sign up to most of these exchanges with just an email address. And a lot of people just look for counsel or guidance in the troll box. I mean, it's ridiculous. I mean, the amount of dumb money in cryptocurrency is astounding. And so that's why it's so profitable right now. Okay, that's why our Elliott waves show up so beautifully, because they are an expression of human emotion. And the emotion of the traders in cryptocurrency is basically more than anything else that I've seen in any other markets. And that is a combination of two things: more dumb money and a limited supply of what we're trading. I mean, that cannot ever be ruled out. You guys always have to remember that when we're trading cryptocurrency. The price of all of these coins is determined by how much money is trading them, the market cap, divided by the available supply. So by design, cryptocurrency is set up to pump. I mean, if you do a Google trend search for altcoins or cryptocurrency and then compare it to, something like, Instagram or Snapchat or something that's like common that people know about, you'll see that like we're not even trending yet, guys. We are still very, very early to the cryptocurrency trading game. So just keep that in mind as we move into the future here. And that's why I was always telling you guys, like, free roll coins. When we take back your initial profit, free roll coins, and just see what these coins look like in a month or two from now. But like, I mean, that's why I say like free rolling coins is better than the buy and the hold strategy, because you're doing both. You're taking profit off the table when it's there, and you're kind of just holding on some coins that are extra profit that you didn't cash out, and just kind of free rolling them, just kind of holding them and seeing, okay, I made back my initial investment on the trade. I made a couple Bitcoins off the trade. Now let me hold these whatever coins and see what they look like in a month. So that way you can kind of do a little bit of both strategies. Okay. But you have to understand, most people are going to lose their money off of that first, off of all these waves, but the first one usually gets a lot of people because, they think, hey, this is a great investment. This is going to go up. This could go 10 times in price. This could go wherever they think it's going to go. And they all pile in. And most people don't even realize that that first impulsive move is going to have a retracement. Okay? But we understand that. We understand the psychology of the market, the structure of the market, the Elliott waves, the Fibonacci relationship to human emotions and to the waves themselves. So we wait. We wait. We literally let everyone else jump in to the train, like load into the rocket ship, and then get shook out and lose their money. And as they're getting shook out and losing their money, we wait. We wait and we get in and we buy that fear. We buy that panic because we want to position ourselves for the next anticipated move. And, most of you guys that have been with me for a while, you realize on a lot of these signals, mostly all of them, except for maybe AMP yesterday, they're all coming from an Elliott wave analysis. And I say AMP because yesterday AMP was more so like, it is a third wave developing, but it was more so like it broke out of a pennant or, a triangle. So we'll talk about that in a second, but the reality is that most people are going to lose money, even on that first move. Even if they buy something where it's going up and they feel like, hey, this is going to go up, it's going to go 10 times in price, as soon as it goes back down, they question their trade. A lot of them will sell at a loss. Some people will just, panic. If it was a margin trade, you're just liquidated most of the time. If you buy anywhere, look, here's the accumulation down here. Okay, here's the point here that it's going to come back down to on the second wave. So anybody that buys, past the accumulation breakout and doesn't take profit, that 76% retracement, 61% retracement, whatever it's going to be at this number 2 point, is going to liquidate them, especially on margin. So understanding how the waves are unfolding and their relationship to Fibonacci entries, that's the key right there. And then understanding how the whole thing is going to play out and the roadmap of where it's probably going to lead to is the other piece of the puzzle. Okay, so that's what we really want to do in today's lesson, is really take everything I'm trying to express to you guys of all these little pieces of the puzzle and put it all together and making it so that you guys can just flip through the charts and have an idea in your mind. What am I looking for? What am I looking for? What am I looking for? Okay, so this is always what we're looking for. We're looking for the rest of the market to show us what's going to happen without us participating in it. Meaning that when this first move breaks out, and this could be a first move. This could be a very first move out of a long period of accumulation. This could be a new market cycle developing, or this could even be a third wave developing, and this is like the number 2 point that it starts at. And let's use radium for an example of that. Okay, now meaning that we've played radium. Okay, and you guys that have been with me for a while, and most of you guys that haven't, I'm sure have seen the analysis video that I made public. But basically, radium, it broke out here of this accumulation box. Okay, and we have a really nice wave that it made up here. Okay, really nice wave right here. Now let me get some of this stuff out of the way here real quick, guys. Sorry guys, TradingView has been really, really slow lately. Okay, so now we have this first impulsive move that came up here. Okay, now I'm sure a lot of people that bought in here thought, hey, you know, this thing's going to 300,000, it's going to 500,000, or it's going to be the new Decred, whatever, you know. And this very well could get as high as Decred got, but it has to go through the process. Okay, so here we have a 1 and a 2 that basically came down and came right back down to the top of the accumulation box, basically. All right, this is another way to really kind of give you confluence in your trades here. This accumulation box here, this is basically, this box represents where the price was in for about a year. Okay, and you know, this top of the box was like the previous high back here. Okay, let's just pull it back a little bit. See if I can find it here. The chart wants to load it. All right, back in here. All right, it's going to take me forever to pull that up on an hourly because there's so much data. But basically, this chart represents the band of price that it was in for over a year. Okay, so this entire move came out, nice wave up, came back down, and tagged the top of our box. Okay, and then it, you know, faked out here a little bit more, and then it came down here. Okay, back down to the bottom of this box. Now I'm looking at this move on a larger time frame, something that could play out, you know, over the next, let's say, month or so. Okay. Now when we look at it like this here, you can see that top back here, the previous top. So when we look at it like this, we have a nice 1 and a 2. Now we realize that, okay, from the bottom here where it started to the top of that wave, now what do we have? We have a nice area right here of 61%, okay? 61%. That would have been a pretty good area to buy, but it went a little bit lower. It went lower here to the top of the breakout box. So, you know, you always want to keep in mind previous levels of support and resistance and, you know, previous highs, stuff like that, and kind of keep them in your analysis as well for places that the price could visit. Like for instance, here we're looking to get into 61%, but when we're looking at this at this picture, we can say, okay, well, this thing could very well tag the top of the breakout box again on its sell-off. So anywhere below the 61% area here and the top of the breakout box would be a good buy. Okay, that's the way I would analyze that. And it wound up being a good place to buy. But now what happens is if we didn't get in right here, okay, let's say we didn't get in right here because, you know, when we look back at this on hourly, there was a lot of other coins to play. You know, this kind of consolidation in the zone lasted for, you know, a good little day or so where it kind of chopped around here underneath of this cloud. Okay, but right here where it broke. Okay, now if we didn't get in on this point right here, okay, which would have been the, you know, the ideal spot to get in on the retracement of the first larger wave, okay, then we're left with a decision to say, okay, when we see this happen, when we see this breakout happen right here, the same story, guys. We don't chase it. We don't chase it. We let the market do what it's going to do, because now we realize that, hey, we're getting a third wave out of this that's going to go, you know, very much higher than this first one did right here. Okay, so this third wave is unfolding now, and its waves within waves are even bigger. So we're seeing this little section right here is nothing more than just a 1 and a 2, a little small 1 and a 2 that's unfolding. Okay, and so what do we do? What do we do when the market breaks out like this, like it did the other day? Sorry, trading, not let me drag it. Come on. Okay. When it breaks out like it did the other day, to basically compartmentalize that move, break it down to a smaller, measurable move, and say, okay, well, we realize now that radium's probably going to continue up. Where would we want to get in? Where would we want to get in? So we do the same technique. We basically take it from the low here, or basically we can even take it from right here where it found its support and decided it was going to go through the cloud. Bang. Right there to the top of that move gives us this right here. Okay, this zone right here between the 50 and the 61. Now, if you guys remember when I sent the signal on radium the other day, I was saying, 115, 120 in that area, because we don't want to buy it as it's going up. We want to buy it as it comes down into this area and sells down and people lose their money on it, because we realize that there's, very well another move to come out of this, especially when we look at the very higher time frames. Okay, so we want to be patient. We want to wait in this area for people to sell it down. Okay, right here came under 115, nice entry. Again, right in here. Now most of you guys that understand the way that these signals are given and the strategy behind them are waiting and realizing, okay, that he's telling us to get the retracement of this move for an anticipated next move to come. But a lot of people that don't understand the strategy are kind of wondering, like, oh, it doesn't look so good. When it comes down here, like 115, 116, or even right here where it tagged like 112 or whatever. People they don't understand. They're saying, oh, this doesn't look good. Is it still a buy? Well, yeah, it's a perfect buy. It's right where we want it to be. So it's kind of like you almost have to think the opposite of the herd, and really understand the bigger picture of what's going on, and realize that we're placing ourselves here for anticipated larger moves, and we are literally buying everyone else's loss. When people are losing money and getting shook out and saying, oh, this isn't going anywhere, let me, maybe people that bought it here are like, and they see it here, they're like, oh, well, let me just get out with 5% profit before it turns around and I'm negative. There's all sorts of emotions that the traders are going to experience, and I'm sure that you guys have experienced them all too, because I know I have. Where you just get into a trade at the wrong time and you don't know what to do. You're like, oh, is this going up? Is it going down? Let me get out while I still have, at least what I put into the trade. And then you wind up selling for, measly little profits. And then, you look at the chart the next day and it's, continuing up. And you're like, oh, man, if I just would have waited. So, understanding the structure of the market, guys, is so important. Is so important. And so, again, here, this point here, okay, we want to get other people's loss. We want the market to do what it's going to do and lay it out for us, and then we look to get in on the retracement of that. And like I said, it could be this, this very first wave here that went up. Okay, this very first wave back here that went up and came all the way down here. We could be waiting here. But you have to understand, that was a larger wave. So as we wait in here, in this buy zone, it's kind of like stellar in a sense. Like it was a bigger move. So it took a while for, us to get out of our choppy zone. But, here, if you were waiting in here, you're talking about 5.5 days of trying to get into a trade anticipating the next move. You guys have to realize that a lot of this strategy is setting yourself up for the next move to come. And you may wait, 3, 4, 5 days, a week, maybe even 2 weeks, to the point where you're even questioning your trade. Honestly, when I spotted Ripple, I thought it was going to happen in 2 weeks. It took 3 weeks to happen. And there was, I got stopped out of Ripple 2 times before I got, I said 525. It went up to like 580, came back down, stopped me out at 535. And, yeah, hold on, I'll answer that question in a second. So, you have to basically be aware of what's the bigger move that's coming, so you're not, questioning your own trade. As far as spotting the top of the wave, it's pretty, after you see something, where it starts to sell down, honestly. Like, like for instance here, like on this one here, we had a nice impulse up. Sorry. We had a nice impulse up. And then right in here where we started to get, the sellers come in, and we see that our stochastic RSI is crossing over and we're losing our strength, then it's most likely going to do a retracement. That's the way I identify. I always basically try to identify where the waves are ending with stochastic RSI strength. Okay, whether it's, a larger wave or like, a 60-minute wave like this, like a sub-minute wave that we're looking at here. This would have been pretty, pretty obvious at this point here. Okay. Pull it back. Right about here where these, we started, doing more selling than buying. And our stochastic RSI was like, okay, it's time to start heading down right in here. Then, and also it made a nice move up. It doesn't matter. It doesn't really matter. It could be an hourly chart. It could be, it's all relative to the wave that you're looking at, to the impulse that you're measuring. Okay. Meaning that this one here, as this impulsive move happened, you could see it was running out of strength on the hourly. Okay. Now, when this one over here happened, come on. I'm just going to have to look at it in a bigger chart. When this one over here happened, it ran out of strength on like a higher time frame. But that's why, that's part of the strategy as well, guys, is that we don't ever want to we don't try to guess the tops. So when, so as the market's in all of this impulsiveness, it doesn't really matter to us how high it's going to go. We just realize we don't even really want to look at it until it's on its way back down here. So trying to guess where it's going to end, it's kind of pointless. Just let it do what it's going to do, and then when it's obviously done and it's retracing, then we put a Fibonacci on it and say, okay, this thing's obviously has ran out of steam. Like here, 6 hours strong, and then right here where the 6 hour gets across, this candle, boom, nice sell down. Now, so for us, it doesn't matter. Like, as soon as we see this first candle come in and the price come all the way down to here, then we could start to put a Fibonacci on it and say, okay, how far could this thing retrace? Okay, maybe even come back down to the top of the breakout box. There's all sorts of ways to look at each individual trade, but how far it goes up, it doesn't even matter to us. It could keep rallying for an hour, 2, 3 hours, but as soon we want to basically let the whole move complete itself and then get in for the next move, because we don't really know how high any of these waves are going to go, and we have an idea, as they continue on, we have an idea based on like extension points, but we don't ever really want to start guessing the tops. So we let the entire move do what it's going to do, and then we look for the retracement of the entire move. Okay, so and that could be on several different time frames. That's why it's you'll confuse yourself and you'll put way too much time and effort trying to figure out when the wave's going to be over, rather than just saying, oh look, radium broke out. Okay, that looks pretty good, pretty strong. I didn't get in on this wave. Let me look for retracement of the next one. So if you were looking at this bigger wave happen, you would have already been waiting in this area by the blue line and positioning yourself for a larger anticipated move to come. And now since this little move came out and it already seems like it's sold down, then we put a retracement on this move here and get in this area for the next one. When you'll get more familiar with the waves as they come, like you'll start to realize, hey, this thing seems like it's running out of energy. But like that's the point though, is that it doesn't even really matter. You could literally like wait until it's all the way down here at this point and say, okay, this looks like it's falling. Where should it fall to? And kind of go off of it like that. So yeah, we want to basically always find our place in there when everyone else is losing money. Okay, and identify the times, okay, based on our stochastic RSI strength, and also its relevance to the cloud as well. Like you can see here, if back on the hourly. When this thing left right here, okay, this corrective wave was under the cloud, all of this under the hourly cloud. This impulsive move right here with the volume pushed us back on top of the cloud, but then it basically had to consolidate in here again until it ran into the projected cloud. Okay, so meaning that this cloud up here was here even when the price was here, kind of showing us that if we continue to hold the price in these levels in a certain amount of time, the support should be higher. Okay, like these clouds are like, that's how the cloud is even projected over here. That's why the cloud is moving up over here now, because it's a read on the market telling us that if we maintain this price for, you know, let's say another day, that our support is now, you know, right now our support is basically at like 125, 127, 125. In another day, our support is going to be up over 140 if we keep maintaining this price. Okay, so how our waves relate to the cloud as they move is very important. You know, like, you know, as soon as this one broke out above the hourly cloud, it showed us that, hey, it's breaking its little corrective downtrend here, and we would want to get in on the retracement of this move, you know. And even here, like the price zone that I was saying to buy was very little price action there. Okay, basically anything in this area was a buy for the next anticipated move to come. And we could draw this chart and this setup like this over and over and over again, guys. I mean, really, it's the same thing. It's the same principle all the time. The more you do this, it's going to get easier. Like trading is not hard for me at all anymore. It's, you know, it used to be something that was like literally 10 years ago when I got into this and I started to say, hey, I want to trade and I want to do this. I would look at these charts. I would look at the numbers. I would look at the MetaTrader 4 platform, and I was lost, literally lost. It was a wonder I didn't lose more money than I did trying to learn. Okay, so but as you go and you'll start recognizing structure and the same setups over and over, where the market will impulse and then it will trace. You're looking for that retracement for the next anticipated move, and you can play that however you want. Like if this was, you know, we're looking for a really larger move to come out of Radium because of the low coin count and you know, the available supply and the amount of volume that's around, and also the picture it's already, the chart it's already painted shows us the possibility that could grow to some, you know, extremely high in value. But if you're trading this thing on like margin or whatever, you know, if it was a different market, you could easily have gotten in here and boom, you take profit right here. I mean, even right now on spot, if you put in, you know, 10 Bitcoins right here, now this market may not have the liquidity for it just yet, but I mean, just as an example, if you put in, you know, 1 Bitcoin or 10 Bitcoins right here, you know, to get out, you know, let's say you put in 1 Bitcoin here to get out 0.35 of a Bitcoin in a day, that's great for a lot of people. To put in 10 Bitcoins here and to get 3 Bitcoins out in a day is amazing for some people. So it's all about like how much you really want to get out of the market. Once you discover the way the market's moving, you have all sorts of options. That's why I don't chase anything at all. Like, because I realize the market's going to unfold like this. So the other day, you know, when Radium broke out again and, you know, went basically here from, let's say, 88 to, what did it go to, like 140, okay? It went up like about 80% in about a day or so. No, about 60% almost. Okay. So in that move where it went up, I understood that, okay, now Radium's getting some play again. Now it's getting some action again. So let's look to get back in. You know, I wasn't accumulating it here right here because I'm just looking at so many charts. I knew Radium had another wave coming, but you know, this whole accumulation here took several days. And when I'm trying to give trades to over 100 people, I really don't want to tell people to start going in and accumulating a coin at a certain range when there's only like 15 or 20 Bitcoin daily volume. I mean, we'll just wreck the chart. So we have to wait for the volume to come, wait for the opportunity to come for us to enter, especially with large amount of liquidity. Okay, so we wait for stuff like this. Here would have been a good time to accumulate it if you're understanding the charts and the next move to come. But here, boom, when you see this happen, just let it happen. Now it's like someone just told you, there's a light on over there. There's going to be a fire over there. It's going to be warm. You should go there and get nice and comfy and prepare yourself for what's to come. I mean, but you don't want to chase it, but when this happens like this, it's like an indicator for you. Like, okay, I should look to get into this market for another move to come up. Okay? And let the market do what it's going to do. Even so, that whole time, everybody's chasing it up. It goes to 140 and it comes all the way down back to 120 or so. A lot of people are going to lose money on that. Only the people that held all through this are prepared for the next journey. Okay, and a lot of people don't understand the geometry of the market, so they're not even thinking about holding. They're saying, "Oh, I didn't take my profit, and let me get out while I still have some." So, letting the market do what it's going to do, and tracking it is the key, guys. It's like having the patience at the right time. You see the market moving up, and you say, "Okay, let me take note of that. Let me think about where this thing could go to, where I would want to get it on a retracement." I mean, if you guys subscribe to the pro version of TradingView, you can even literally say right here, okay, this thing's selling down. Okay, when it gets down about here, right click on your chart, add an alert at that price point. Boom, add an alert right here, and you can have the chart set off an alarm for you. And all your alarms can be kept track of over here. Okay, all your alarms. So, put the tools to work. Like set up your retracement points and wait for your entries, and even set alarms. If you don't want to look at the chart, set an alarm. You can set it up to where it will send you an email. If you get the really expensive, not expensive, but the biggest package that they offer, it'll send you a text message. So, put all the tools to work and let the rest of the traders lose their money and do what they're going to do and identify the market structure for you. And then move on from there. So, that's the biggest thing. Like let the market do what it's going to do, understand the geometry that's unfolding, and choose your entries. Okay? And then, once we're in, watch the movements of the price based on the Ichimoku cloud, the stochastic RSI, and basically, I use the exponential moving average a little bit, but mostly the two that I will use together all the time that I feel like are the ones that you guys should have on your chart all the time are the Ichimoku cloud without all the lines and the other indicators built into it, or the trading signals that are built into it. Just the cloud and the stochastic RSI strength. Using those two things with Fibonacci and the understanding, the knowledge of how the geometry in the market should unfold are golden. Keeping it simple is very effective. Okay, I've known some traders that'll put 1,000,000 lines on their chart and still don't exercise the proper motions at the right time. So, you don't have to overanalyze the market. You just have to have a general understanding of it and have certain things that kind of give you confirmation in your trade. Okay, so we just want to flip through some of these real quick and just get an idea. All right, let's look at Nautilus coin. Okay, let's look at Nautilus. Come on. Sorry guys, TradingView has been very, very slow. Very slow. Okay, maybe we won't look at Nautilus coin. There we go. Let me get a 6 hour on there. Okay. Now, what I want to point out here is that as these waves manifest themselves, it's really important to track that they stay on course. Okay, we really feel like we have a lot of different indications that are showing us that this trade should stay on course. Okay, meaning like higher time frame where we are in a wave count, also higher time frame, stochastic RSI strength, relationship to the clouds. Like for instance, Nautilus coin here. As soon as Nautilus coin came around here and kind of slipped through the clouds right here on the daily, it got really strong. Okay, got really strong. It was choppy back here in this move in the clouds. It was very choppy. But this move is free of the clouds, so it's very, very, structured. Now, looking at higher time frame stochastic RSI strength, we see stuff like this. 3-day, very strong. Okay, lots of room to grow. Lots of room to grow. Weekly, also pinned up here, very strong. Now, I just want to point out that when you see the stochastic RSI strength up here like this on like a weekly, that's just telling you that the market's very strong on like a weekly level, and this could very well ride up here pinned like that for 2 to 3 weeks. I mean, Dash spent I think 3 weeks where the weekly stochastic RSI was just pinned up here for like 3 weeks. Because what's going on in a larger picture is that, like, for instance, on like the monthly, this thing just wants to grow. It wants to grow. It wants to start a whole new cycle. Okay? So, again, this stochastic RSI indicator is golden, guys. Okay? And like when you click on it twice down here, it takes up your whole screen, if you're wondering how I got that there. But yeah, this is like, I click on it twice just to get a bigger picture of it so I can just kind of look at it real quick in relationship to the price. But when you see stuff like this, guys, like where the market spent a long time in a downtrend and then you get an oscillation of strength on a higher time frame, it's really an indicator of, hey, this thing has a lot of potential upside. Okay, that's what I was saying, trying to explain in a couple of the little videos I've been sending on the market reviews, that when you see very high time frame stochastic RSI strength like that, it's kind of an indication that on the lower time frames, buy the dip. Look for somewhere to get in on a retracement, because this could very well be getting a larger move to come to grow out of this. I mean, these are growing indicators. Okay, this is an oscillating indicator that's going to grow in strength as we go throughout the months, or has the potential to. Just by looking at this, there's no guarantee that this thing's going to oscillate all the way back up to 100 and then oscillate all the way back down to 0. No, you can't look at it like that. It's not a guarantee that you're going to grow to go to the moon. Like, you can't interpret it like that. But it does give you an indication that, hey, if we keep trending up on a larger time frame, this thing has a lot of space to grow. And then you would kind of like use your clouds as confluence and stuff like that. Like if I saw a stochastic RSI on the monthly like that, and then like for instance a 3-day cloud that was like right in the 3-day cloud, like we are with Sia coin. Factum just cleared it, like I was talking, it just broke through. But like, for instance, like Sia coin, Digibyte, however you say it, they are in 3-day clouds. Okay, so I want to switch to Sia coin now for this example of what I'm trying to explain to you guys, because Sia coin also has very high stochastic RSI monthly. Okay, look, lots of room to grow to a new market cycle. Okay, this is a whole, let's get the Elliott out of there. There's a whole market cycle to happen with Sia coin. Okay, so right here where we see that our stochastic RSI on the monthly has the potential to really, really, really grow high. Okay, that's that's telling us that this thing could do a whole new market cycle. But then we want to kind of look at it on like some other time frames to see, well, how fast would that happen? And that's what I was discussing with you guys the other day, is that when you see something like on the 3-day, this is all the recipe here to continue on. But that's why Siacoin has been so choppy. Okay, that's why Factum was so choppy for a while, because it's in a 3-day cloud. This entire resistive belt that it's in here, until this thing works its way back above basically 100. Let's just say 100. I guess it's more like 95, but let's just say the psychological number of 100, that psychological barrier. Once this thing breaks up above 3 digits again, then it's free of all its higher time frame resistance. Okay, so this thing will most likely get on a real tear once it's above 100. Okay, but you have to realize how to interpret the charts, and we can say here on the monthly, wow, this has a lot of room to grow into a new market cycle. But when we start looking on like the weekly and the 3-day, we can say, okay, well, we have to work ourselves through some. Okay, the weekly doesn't have any cloud resistance. It's mainly the 3-day. Okay, we can identify, okay, this thing is a new market cycle that's coming. It would be a good buy to get in, here for a larger picture to come. But if we miss that entry and we, see these waves unfolding in here, and they're unfolding in the middle of a 3-day cloud, well, we have to be aware that that's kind of like, I don't know, it's kind of, using the Ichimoku cloud is almost like forecasting the weather. It really is, because like you can almost like, that's kind of the way that I look at the cloud. Like I will literally look at the cloud and say, oh, there's some stormy weather ahead, or there's some choppy price action ahead based on that cloud. So that's why when we look at this thing on the hourly, okay, it did a nice impulsive move up. Okay, nice impulsive move up. Everybody thinks it's going to go over 100, but then it comes back down, and it's just been choppy since. Okay, that's why, because this thing is in a 3-day cloud. Okay, but when we look on the hourly, what does the hourly tell us? Well, we're actually still maintaining the trend because we're above the hourly cloud. This thing is now accumulating on top of the hourly cloud. And so what's it doing now? It's creating another zone for it to break out of. Another zone to break out of. So we can easily map that out and say, okay, Siacoin, once it breaks this point right here, about 77, 78, it's almost there. It looks like it might be going for it actually today. We'll see. We got an hourly stochastic RSI strength. Nice and good. We're bouncing off the cloud here. Okay, we're looking like we want to leave this zone. Understanding every little detail about how these markets work, guys, is very important. And understanding how to read these charts. Because how they relate to each other in the different time frames, once you start to put all the pieces of the puzzle together, then you really start to see it. Okay, so we can identify here a couple things just by using Siacoin as an example here. One, we can identify on the monthly level, it broke out of an old market cycle. It has a lot of potential upside to grow into a new market cycle that will most likely make a new all-time high. Okay, most of the time when market cycles are left behind and things break out, they usually try to go to make a new all-time high. And that new all-time high will usually be the 1.272 extension from the first high. Okay, we'll look at that in a second. But so we can identify a couple things right away. Zooming in from the month, starting at the monthly and working our way in. Monthly, boom, strong, a lot of left the market cycle behind, a lot of potential upside to grow into a new market cycle, new all-time high. The weekly also looks very strong, looks like we could continue up. Okay, but why has the price been so choppy? Why aren't we just kind of going for it? Okay, because of the 3-day. Because of the 3-day. So then you put the pieces of the puzzle together and you say, okay, the stochastic RSI strength is there to try to push us through this 3-day cloud. Okay, it's there. But is it going to happen right away, or is it going to be chop, 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 chop until we get there? When you see 3-day clouds like this, the price is going to, on the lower time frames, it's going to go up and chop back down. Go up and chop back down because it has to work its way through this resistance cloud. Okay? Then when we look at it, let's say on the daily, we're above the cloud. So this really, just this example right here really points out to you how effective just the Ichimoku cloud can be in your analysis. Okay, just by understanding its relationship in different time frames too. Like we're bullish on all time frames for this coin. That it's ready to go up. It's ready to go up. It's ready to go up. The only thing that's keeping this thing in all of this choppiness where it makes an impulsive move and then consolidates and chops around for a while, and then it makes another impulsive move and then consolidates and chops around for a while. The entire reason that coin is doing that and not just, going up very fast, that entire reason is because of the 3-day cloud. Nothing else. The 3-day cloud. That's what's causing this thing to chop around, to chop around, to chop around. So you just have to understand that. You just have to understand that, hey, this thing's in a 3-day cloud. Maybe I'm either going to, A, wait for it to break out of a smaller zone, which we can identify like on the hourly, or just say, hey, I don't even want to, maybe if this thing drops down to like 70, I'll buy it, but I'm not really even that interested in playing it until it gets above 100. I mean, which might sound crazy to some people to be like, oh, it's going to go another 25% up, but you don't want to buy it until it's there. It might sound kind of crazy. You could get another 25% out of it, but all depends on like your trading style and how you really want to trade. You could have sat here and bought Saya coin at about 70, 75 for the last week now, right? What are we talking about? Yeah, just about 5-7 days almost. Count back here. So it all depends on what your trading style is. I mean, if you want to just sit here and accumulate this thing and understand, okay, there's a bigger move that's going to come out of this, but it has to work its way through this 3-day cloud, then you can sit here and accumulate this. It all depends on, if you want to hold it, if you want to, how. I don't really like to hold stuff. I'm a momentum trader. Okay, I don't really like to sit here and buy this at 75, 72 and to just wait and wait and wait and wait and wait. It just doesn't fit my trading style. I like to jump onto the computer and say, boom, this is moving. Let me put my money in here. Okay, maybe I take it out in a few hours, maybe a few days, but I want to get that impulsive move. I always like to trade with the impulsiveness of the market. When the market's kind of consolidating, chopping around, correcting, I just let the market do what it's going to do. The only way that I would trade this here is if I really broke it down into a zone that I would get it when it's leaving. And that would be basically right in here. You basically can lay out, maybe even from here, lay out this point right here. And just say, okay, when it leaves here and starts to trade above here, okay, then I'm interested in getting into it. When it gets maybe above, then it stabilizes above 80, okay? Now you have to understand, there's a million people that are thinking like me also, because that don't want to buy it in here and are saying, okay, I'm going to buy this thing when it starts to move, and that's what pushes the price up. So me waiting till 80 to buy this thing and buying it when it's actually showing me it's breaking out and not falling below the cloud, that's to me, I'm helping push the price up, and so are all the other people that are going to come in and buy this thing when it breaks above 80. So it's just kind of a little bit of a safer play. Sure, you could buy it in here, 72, 75, whatever, and just kind of sit on it and wait. But there's really nothing saying that this thing wouldn't get dumped down to, let's say, 55 again. Now, obviously you would have to get through this hourly cloud. This is kind of like a little bit of confirmation. If you're holding this thing in here, you're watching that it respects that hourly cloud. You do not want it to break through the hourly cloud and start trading under the hourly cloud. Now, when we realize the bigger picture, we can say, okay, it's probably not going to fall below the hourly cloud because it's trending up. It's got higher time frame stochastic RSI strength. So it would probably have to take something serious to push this thing, back down to 55. But it could happen, something like some, fear, uncertainty, and doubt in the thread. Maybe Bitcoin just goes right now from like 1210 to boom to like 1260, and everybody's like dumps out of their altcoins. I mean, there's a lot of little factors that can affect the altcoin price. So that's why I try to take my trades with a little bit more certainty, even if I take a little bit less of a percentage, because chances are I'm going to get out of the market at the right time. Where a lot of these people that may be accumulating here, they don't understand, what's to come next and where to get out of the market, So I use my strategy with momentum. I don't like to sit around and wait. I don't like to, and I do find myself waiting a lot of the time. Like that's why I don't. I try not to wait too often. Like for instance, like when we got into Steam, I didn't think Steam was going to drag on that long. That's why I just got stopped out at break even and said I'm not going to re-enter this thing. It's taking too long. It will come to a point where you're just like, hey, this is taking too long. Let me look at it again later. Because for me at least, like I said, I like to trade with the momentum, and I'm not trying to send more like as I make more money on Poloniex, I put that money back into the markets. And it depending on how you want to do it, I don't want to be ID verified on Poloniex, so I have a daily routine of where I'm withdrawing $2,000 a day out of Poloniex and withdrawing my profits off of there. I don't want to ever like say, oh, all these coins are moving. Let me put another, 10, 20 Bitcoins into Poloniex to try to chase these pumps. Because then I'm exceeding my disciplined regimen of how I want to trade. And it's been really hard because there's a lot of things moving. And, every day I'm like, oh, man, I should send some more to Poloniex. But I'm like, no, I need to stick with my routine and put my profits back into other coins and keep withdrawing from Poloniex and not depositing. Because who knows, we may make up one day and Poloniex is offline. It happened with Mt. Gox. It happened with Cripsy. It happened with MintPal. I've seen it happen to 3 different exchanges, and there's a couple others too that were like smaller ones. I'm not saying I think that's going to happen with Poloniex, but you don't ever want to have all your eggs in one basket and be putting more money on the exchange than you should, because you never know. You never know. So take your profits and extract them and put your profits back into other coins. But try not to keep loading money into the exchange. Because what happens if you get caught up in a trade like this and you're like, oh, I think this is a good trade, but I see these other things moving, then maybe you'll want to deposit more money to go get into another trade. The best thing to do would just be cut the plug on this thing while it's in its accumulation zone and wait for it to move. Honestly, wait for it to move. Because while you're waiting 5 days for this thing to move, you could, pull 30% out of store join coin or, some other coin that's moving and get that little percentage back or be making money on your money instead of waiting. So that's why I'm a momentum trader. Like, I'll let everyone else kind of sit and wait, and then I'll kind of react. So, but being able to identify the market and understanding why everyone is waiting in this choppy zone right here gives us an advantage, because we're looking at it, we're saying, okay, this thing's got to work its way through that 3-day cloud. Until this thing works its way through that 3-day cloud, people are going to be sitting and waiting. They're going to be literally sitting and waiting in their trades until it gets enough momentum to come through that 3-day cloud. And the way that you usually see that happen is you get a nice oscillation on like a 6 or 12-hour time frame. We might be getting it here. This looks like it's, it's trying. Okay, this market strength right here on the 6 hour is trying. We have a nice wick right here, several wicks actually, where the price came down and got sucked right back up. Now this one right here, this little star, okay, is opening up here higher. It hasn't let the price drop just yet. We got some good 6 hour strength behind us. So we may have the strength to try to push out of this a little bit further, okay? But we realize unless it gets through this, well, not unless, it's going to get through this 3-day cloud, but when it gets through this 3-day cloud, that's when the market's really going to pick up momentum, really pick up its strength, and there's going to be a lot more volume, okay? You're going to see it climb up the volume ladder on Poloniex, just like Factum right now, okay? Just like Factum. And let's look at Factum to kind of explain that to you guys real quick. Factum, same thing, except now it left its 3-day cloud. Okay? It left. Okay. So now, what is Factum going to do, and why? See all this right here? All this chop. Factum literally spent a month. Making small moves, but respecting its 6 hour cloud. Okay, right here, where it finally came on top of the cloud, it literally made 30% moves up, 15% down, 30% up, 15 down, 30% up, 15 down. And it stayed in this band right in here, where every single time it broke out, everybody thought, hey, it's going to go. No. Hey, it's going to go. No. Hey, it's going to go. No. Hey, no. And then finally, right in here, with this oscillation of strength right here, okay, when this 6 hour crossed over, it was enough to push this thing out of this area, out above this green line. Okay, let me just make that line purple so it's a little bit easier to see. Okay, so now what does this tell us? Okay, this is really important because we have to understand how price gets left behind. Okay, now this tells us that this thing spent a long time chopping in this area. Okay, because it was in a 3-day cloud. It was in a 3-day cloud. It needed to work its way through this overhead resistance here. But as you can see, there's really not anything else in the way now of this thing making a new all-time high. Really not too much else in the way. Okay. So where would that new all-time high be? Line that up a little bit better. Boom. From that top to about that bottom. What do we have here? 109.7134. So let's just mark that out right here. Boom. Okay. So there's a very good chance now. A very good chance that as Factum gets more momentum behind it and gets more volume behind it, it's going to try to make a new all-time high to this level. Okay, to this level right here. The 1.272 is usually it probably, and don't get me wrong, this thing could very well get all the way up to these extensions. Okay, really depending on the volume and the momentum in cryptocurrency. But this thing could get all the way up here. Let's see. All the way up here. Okay. Now I'm talking like, months. It would take a couple months probably to get up here. Although Dash did it in a little over a month. So, it's possible. But I'm not, just shooting for the moon. I'm going for a realistic target in this thing, right around here, the 1.272. We clear that and we start, getting support over that, then we'll look to re-enter for some other extensions in price. But what would be a good retracement? On Factum, well, if I haven't entered, what would be a good retracement? Well, that's exactly what I'm getting to here. Now that we cleared the cloud, it's almost certain that this thing is going to come back down and tag the cloud again, okay, to confirm that support. Because look, we haven't confirmed its support. We broke the resistance, but we have not confirmed that it's support just yet, okay? So now what I'm looking for is one of two things to happen. If it seems like it has enough strength, we may hit this point. But now, I don't think we're going to hit that point because of all this wick action here on the 3-day. Now let's look at this on like an hourly. Remember that purple line right here? This is our top of our breakout zone. Okay. So, how does that look for trying to find a place to enter now? Okay. One of two things I would look for here. I would look to either A, buy right here at this line, for this thing to come in here and maybe everybody think it's going to continue on and then just sell back down. But the further we continue into time, the further we go into the future, the support is climbing. Okay, we see that with represented here with the cloud. So we may have to, if you're not in this, you may have to possibly bump your entry up a little bit more. You may have to say, okay, let me try to get in this area. Okay, it looks like these, I would try to get a little bit lower than these prices, right about in here. Okay, based on the fact that this thing should try to test the area that it had to leave, this resistive area. It basically broke through here, and now it should try to test this, at least tag it. Okay, if not, then I would be, if we come a little bit closer in time here, I would be looking to get as close to this cloud as possible, because this thing's going to hold a real bullish retracement of this impulsive move. It basically pushed off of the cloud here. Okay. And for us to get a 50% retracement, it doesn't look like we're going to really... 61 would almost be this line. 61% retracement would be this line. So now it's basically watching it and saying, okay, where's this thing? You know, it's obviously consolidating now. Okay, it's consolidating. So we kind of map it out. Say, okay, this thing is basically making lower highs right in here. So let's watch it. Let's watch it. If this thing breaks this line and starts to trend up here, then you may want to buy it because it's going to leave this area behind. It did its consolidation, it did its little correction, and boom, it's going to keep going. But we don't want to, you know, buy it too prematurely. We want to say, okay, this thing, you know, the hourly, you know, this looks like this whole move basically was made on like a 6-hour push off of the cloud here. 6-hour oscillation of strength. Meaning that right about here, it started stacking up right here, right on this 6-hour crossover here. So this thing could still sell down a little bit more until this 6-hour seems like it's, you know, getting the potential to cross back over again. Okay, cross back over again. So I'll be watching two things. I'll be trying to buy as close to possible as this line and wait. And we may even get a sell down to this area while this is still getting weaker before it crosses over again. So I'll be looking for, first and foremost, enter on the retracement of this move, you know, anywhere between the 50 and the 61%, which is also the top of that box, the top of the breakout line. Around the time that it seems like this, before the 6-hour strength crosses back over. Okay, so that's preferably entry number one. Entry number two would be, you see that thing breaking out and breaking that line, get it. And then just, you know, or if you see it break out, a lot of times what will happen, and that's actually kind of like what Bitcoin's doing right now, is it will come, like, it'll break out like this and then come back down and tag the breakout line again. Okay? Oops. It'll come back down and tag the breakout line. So sometimes it'll break out and then the price will come back down and tag the breakout line like that. Okay, so look, you know, you just want to watch it. You know, want to basically like try to get it on this retracement, but if it does not give a retracement and it starts to break out, look to buy it out. Buy it near that breakout line. Okay, near that breakout line. So, you know, you want to always break price down, guys. Always break down each individual move into another move to come. And that's like, for instance, that's exactly what I'm doing with Ethereum right now. Before I really decide, okay, now Ethereum is showing me a sign here. Okay, I guess we're gonna have to finish it up here talking about Ethereum. But basically, like, always consolidate the price down, guys. Always. And like, for instance, when we saw Ethereum here, okay, starting to leave down this downward trend, it trended up on this line, making higher lows here, lower highs, and then boom. Okay, so now we just left back all of this. We left this behind. Now we have a new little formation here. Okay, new formation. We made a high, lower high. Now, are we making a higher high here? Okay, here we have higher lows. So basically, the price is mostly all the time, guys, going to come into some sort of a pattern like this. Okay, where we can literally mark out the support, mark out the resistance, and when it leaves, we know, hey, it's leaving this behind. On the way up, on the way down, it doesn't matter. And most of the time, these are Elliott waves leading into these. Okay, that's why these chart patterns that a lot of retail traders will trade. A lot of these patterns that retail traders will trade are just the consolidations of our Elliott waves, whether it's up or down. Okay, so right now, these are in consolidative zones. On a higher time frame, we're actually in like the middle of a breakout wave for Ethereum. Like Ethereum's been really trying to get out of this zone. Okay, really trying to get out of this zone, meaning that it held, a nice retracement from this large move. Okay, this is only a 50% retracement. Now I'm looking at Bitcoin Ethereum against the dollar here, just because I'm actually trading it against the dollar on Bitfinex. But same thing. The chart for Ethereum Bitcoin just looks a little bit different. It came a little bit lower of a retracement level. But what we can see here is this thing made a large impulsive move. It held a relative retracement here. And now it's trying to break out, trying to push out of this area. So how do we track that? We literally break down the price bit by bit by bit and say, okay, we left this behind. Now we start coming out of here. We get another, let's say, what are we on, like the hourly here? Okay. Looks like we've already opened an hour outside of that zone. And looks like what it's doing now is, like I was saying, it came out and it's coming back. It's coming back to the top of this line to give a second buying opportunity if you didn't get in here, or to basically establish with the market that this resistive line is now support. And we see that over and over and over again, guys. That's why when you see things breaking out, you don't even have to chase them on the breakout. You can wait for them to come back down and tag the breakout line most of the time. AMP just did the same thing. Like when we talked about AMP yesterday. Now, AMP was one of the few signals I gave recently that was not based off of solely off of Elliott wave theory. It was basically like an obvious breakout. Okay, meaning that, there we go. Let's go like the 6 hour. Okay, meaning that we obviously had, a breakout going here. We had, some support here, some lower highs, and then boom, this candle right here. Okay, this candle right here came through and started to break out. And we're looking at 6 hour, but let's look at that on like an hourly. Right here. Came through, and even came up and came back down and basically pushed back out of this zone. So, as you see things moving here, you can still try to buy them under the line, because you sometimes will get that little pushback, that little, sell-off that pushes, the market up a little bit further. So, but always break the price down, guys. That's how, retail traders make money all day long trading these retail patterns. All day long. But we make even more money because we realize that our Elliott waves lead into those retail patterns. Okay? Meaning that, almost every coin that we're in right now, Library coin, Nautilus coin, Radium. Well, Library painted the cup and handle. Nautilus coin painted the cup and handle. And Radium is getting ready to paint the cup and handle. And what that really is doing is that's just our third wave that we're already expecting manifest into something that everyone else can kind of latch onto and say, hey, this is probably a good deal. Really, it's the only way to explain it. Because people don't understand the geometry of the market and that there's another move coming. So if we see here, we got a nice wave 1, wave 2, and we're going to get a 3 out of this, and that this point right here held a good retracement. We're already expecting this to happen like this. We're already expecting this to happen. But most people don't understand the geometry of the market and don't take the time to tune into the Elliott waves, okay? And they'll latch on to something that looks like a good buy. And this, to a lot of traders, looks like a good buy. The cup and the handle. And when it breaks this point across, basically, when it breaks this line, then the retail traders come. Okay, and what does it do after it leaves that area? I know this is a little bit of a sloppy line here, guys, but basically what I'm trying to show you here is that when it left this area, it rallied out, consolidated, came back down, tagged the area here, which is also like tagged the exponential moving average, and now it's continuing on. So you don't have to like chase the breakout either. Like you can, buy things as they notice they're breaking out, but then be like, okay, let me try to buy the breakout line. Let me try to buy this thing as it comes back down here to like 19.5 or 19,000. Okay, so it's really just a matter of understanding the emotions that the market's going to make, how they're measurable, how you should not be experiencing the same emotions as everyone else. Because as soon as you chase things, and as soon as you chase things up and you start to get into all these kind of emotions, you're going to start losing. And as soon as you start to like experience these emotions right here, if you're in the trade experiencing these emotions, you're losing. If you're not in the trade expecting other traders to experience these emotions and dump out into an area that you could buy. Now, in this example, this wouldn't be where you would want to buy. But, just saying, like, most of the time, like, if this is going to be a continuation wave, when people are, like right in here, a Nautilus coin, for instance, all of this right in here, people were getting anxious. They were, starting to wonder what's going on. Should I sell? People are losing money. Anybody that bought in here, as this comes down here, they're losing money, and they're like, oh, what's going on? Like I don't understand my trade. So that's when that we want to be ready for that. As people start to get anxious and deny the fact that maybe they're at a loss, we're looking to get in. We're looking to get in on that. So, this is a real psychological game, guys, and understanding the repetitiveness of this over and over and over is really what leads to gaining in these markets. It really is, because then we start to realize how everyone else was losing and how we may have been losing, and then tuning into it so that we don't experience that. Let's look at XMR real quick. You said it looks like it's breaking out very well. Possibly, yep. It's got to work its way through this 6-hour cloud here. But yeah, once this thing gets above the 6-hour cloud here, the thing with XMR is it was trending very nicely in here. And then it looked like it was just about on its top of its 6-hour cloud here. And then this, fear, uncertainty, and doubt hit the market with this document that was pretty old, and it was already, proven to not be true, apparently. But saying that, this anonymous coin isn't so anonymous. And then so, all this fear, uncertainty, and doubt, whatever, in the market. But, it looks like it's looking to get back on track, okay? Because this one basically printed out. I mean, honestly, when we look at this thing on like hourly, we see the exact model. Come on. We see the exact model of the L8 wave structure, which is this model right here. All the subminute waves, everything all lines up, except this is showing a third wave coming out of this that was very impulsive and, obvious, whereas our third wave coming out of this is like, started to look kind of impulsive, and then right here it got broken down. So it has to work its way back above this hourly cloud here, which it looks like it's going for right about now. Dollar pair 21.50. So yeah, definitely. But this is what we would look for. Like look to see, okay, this thing's getting back on top of its hourly cloud. Then we'll start to, if it gets support above this hourly cloud, we're going to see projections start to come as the hours unfold. Projections of where these clouds could be. Okay, so yeah, there's a lot, guys. It's definitely it's something that you're gonna get a good grasp on from this month of training, but it's definitely gonna take flipping through the charts, putting those Fibonacci ratios on there yourself, putting the support and resistance lines on there yourself, watching the indicators yourself, and like really practicing, because, and the best way to practice is like actually like take all this knowledge now and either go on a demo account and go hard, like literally trade on a demo account and like with big amounts so you can really get an idea of what it would feel like to win or lose. Or take this strategy and start very slow. Start slow with just maybe even 10% of what you thought you were going to trade with before, because as you make mistakes, having a foundation of knowledge that you're going to build on is going to help you as you make small mistakes to realize, oh, okay, yeah, I shouldn't have done that. I moved on this a little early. Oh, I should have looked for this, or I should have looked for that. Now that you have this base foundation of knowledge, it's going to give you something to fall back on as you make your own little mistakes and get your own practice with it. So, don't just take this knowledge and say, okay, let me just start throwing 100 Bitcoins into trades and stuff like that. Because, you'll probably do okay, but in the long run, you might, have skipped a section of your own self-knowledge that you need to experience, which is, making little mistakes and saying, oh, now I realize why I made those mistakes. Okay? So losing is the number one key to learning, guys. And like I was saying in the beginning, there's only two ways that you guys could learn this. First way, having someone sit there and show you step by step what to look for, like I'm trying to show you guys. That's the first way. And it's not the easiest to find that. Or the second way, lose a shit ton of money until you're like, oh man, I can't do this wrong anymore. And then, that's how I learned. I learned from losing, until I was like, yo, I cannot afford. There has to be something here that you can make sense of in the market to be able to win. And for me, it was understanding how everyone was losing. So to be able to win in a game where 90% of people are losing, and to be the 10%, you have to understand how those 90% are losing. Simple as that, and not make the same mistakes. So that's it for today, guys. I'll catch you on Wednesday, and keep stacking the Bitcoin. Enjoy, and I'll talk to you guys then. Take care.